Hey, welcome to Walk with Will, and I tell you what, today I have two amazing people here with me. I have Nick and Candace with PRMG. Now, there's a lot of things going on in the industry when we talk about mortgages and rates, and we can't afford this, we can't afford that, and what's a jumbo loan, what is a jumbo loan, what's a conventional loan, and as we say, what's a traditional conventional? So can you give me a little more insight on that?
Get through all these tongue twisters, right? So you
Right.
say traditional, conventional, say that like you said 10 times without stuttering on that one, right? And so most people probably know what a conventional loan is, what an FHA loan is. That's what the majority of the people fall into. And the problem is that a lot of people think that we have to do 20% down, and really that's not the case, right? And so what happens is with a conventional loan, it would be something like 5% down. An FHA would be something like 3.5% down. So you got 3.5% down that you'd put on your purchase. Everybody's situation is different. So everybody's talking about the market. What's the market doing? Rates are high. Rates are coming down. I'm looking at bankrate.com or something else, and I'm seeing, hey, it's saying 6% today. You're correct. In a perfect case scenario, it probably will be 6%, but for your personalized scenario, it may be a little bit different. And that's why it's so important to really get in touch with the proper people who are the professionals in this industry, to really be able to look at your situation in a whole, to tell you exactly what category you're falling into. And so when we talk about the conventional products, the conventional, like I said, is typically something that we do that's 5% down. We do offer a special product that's called Home Ready that we can get you as low as 3% down. Now with that product, there are a couple stipulations to it where it has some income requirements.
I knew it was a cat.
Always.
But it's a very, very good alternative product for a lot of people, for some people that fall into that category, because what we do is we will look at the county, we'll take that median income, and whatever 80% is of that median income is going to be your limit per household.
Okay.
But some people do fall into that category, and when they do, it's really good for them because you can get into a conventional product that typically has some better interest rate pricing, right? So what I talk about when I'm talking about pricing, I'm talking about buying your rate down, right? So it may cost you less to purchase a lower interest rate. And I'm not sure if you've ever heard of that. If you haven't, that's something that you can Google or something that you can reach out to us and we can tell you a little bit more about what that exactly entails. But yeah, very good product. For people who are looking to purchase their first home, I think it could work out very well for them that are getting started in the workforce, right? And as long as you have decent credit, right? The product does have credit limits, and we won't get into that today. But yeah, so it definitely falls into certain categories where it can work for certain individuals.
So, if I'm hearing this correctly, as little as 3% down.
Yes, sir.
So that means that's less than what FHA is, which is 3.5%.
Correct.
But there are little criteria that you have to meet.
Yes.
Okay. Then I heard something about buy down. We're not going to go deep into buy down, but when we're talking about buy down the rate, does that mean if I say, for instance, I want to buy it down to a 3%, can I do that, or is there like certain tiers that you have to spend a certain percentage to buy it down, and it doesn't say, hey, rate's at 6, I want to buy it down to 3, so that's 3%. So do I just put 3% down?
No, so it works a little bit differently than that, right? It works in something called points, right? So points is going to be the 1% of the loan amount.
Okay.
And so when you're talking about points, that's how much we're going to charge you for it. Now we have something called a pricing sheet that we look at on our side. And there's kind of, when you're saying what you want to buy it down to, like we can buy it down to 3%, sure. It's more than likely going to cost a good grip of money to do that.
Okay.
But if the consumer wants to do that and they have the correct amount of funds, we can get you at whatever rate that you would like.
Man. So I'm hearing you don't have to have 20%. We can go as low as 3% down. And I guess what does that entitle to? I guess detail as far as price limit, the loan amount. So can I get 3% down on maybe $1 million home?
Well, that would be something completely different.
Oh, okay, okay.
Yeah.
All right, well, hey.
So now we wouldn't be talking about your traditional conventional product, right? So we wouldn't be talking about conventional products. At that point, it's something actually called jumbo. A jumbo product is something that's over what's called the conforming limit. Now, the good thing is this next year, 2023, they are upping the conforming limit by $79,000.
Oh,
right?
wow.
Yeah, so now you can go purchase a house with as low as 3.5% down at $726,200.
True.
Now that's your loan amount, right?
That's your loan amount.
So add 3.5% to that, and that's your purchase price.
Right.
We don't have to get into mathematics right now.
Oh, yeah, that's not because I was carrying the 1, taking away the 3, dividing and square root, so, that's,
I forgot my calculator watch at home, so we're not gonna do that right now. So, yeah, you're absolutely right. So if you're looking at something that's above that limit, we start having discussions about something called a jumbo product.
Okay.
Okay, jumbo product is a little bit different. Pricing's different, rates are different, requirements are a little bit different, right? Now, do we have products that can get you as low as 3% down for a jumbo product? Absolutely. It's a special product that, depending on your employment, right, we can do that, right? So we have product it's our doctor and nurses program. So if you're any kind of physician or MD, a nurse, a veterinarian, right, and you're wanting to buy something over the conforming limit, we can get you something as low as 3% down, right? So typically they fall into the 5 to 10%.
What about the stay-at-home moms that's nurses?
Well, yeah. Well,
Good question.
Hey, as long as you have those letters behind your name, brother. I mean,
okay.
I think we can make something.
All right, I'm just trying to figure out. I'm trying to make ways of, we got to make it somehow. But that's good to know. So, if I'm understanding correctly, you said that's the loan amount. So, say for instance, hypothetically, we're going to say $725 for easy math.
Sure.
I know you said $726, but I like to do easy math.
Absolutely.
So, if I'm getting a house that's $1 million even, and I put, let's say, $250,000 down, that puts me into, no, that still put me, no, I put $275 down, that puts me at $725.
Mm-hmm.
So that puts me into the conforming loan?
Yes.
And then I can get, so do I have to put 3% on top of that, or how does that work?
No, sir, all you gotta do is come down to the conforming limit. So, if for purposes of good math, right, just 725, right, let's just say it's 725, you can go buy whatever price of a home that you want, and as long as you can put down enough money where your loan amount is under the said conforming limit, you can get into a conventional product.
And that will get me into a conventional rate, which is different, as you said.
Yes, sir.
And so the difference, is it a big difference? Is a jumbo rate higher?
Jumbo rate is typically higher.
That doesn't make sense though. I'm spending more money and I'm paying a higher rent, so I might as well get a smaller house.
Yeah, you think so, but the market does some very different things, right? So
the
market is something that we all have trouble understanding.
Exactly.
So to say that a jumbo product's gonna be X% higher than a conventional product is really unfair to say, because it depends on what our market's doing.
Gotcha.
I don't know if you've ever heard of an adjustable rate mortgage, but 5 years ago, those rates were awesome. This last year, they're not, right? So it all depends on what the market is doing, and those different products are gonna have different ways of going up and down as far as their interest rates, right? So they're gonna react a little bit different to the market depending on the product, but also depends on the individual's situation, right?
So when we talk about individual situations, there's a lot of people that's here that's self-employed.
Yep.
So now I know there's different programs out there for self-employment. Now, of course, a lot of people write off as much as they can.
Sure.
So, but what if they make enough on the gross, but by the time they write everything off, they don't, it's like they make $1 million, but then they show $25,000 for the year.
So we're going off of 25,000.
But I make $1 million.
But you wrote it, but it gets written off. See, and that's where a lot of things can go into this gray area, especially for business owners. And you know, that's why I love so much trying to talk to business owners, so we can help educate them. And really, if they're in a situation where they had a year where they had a bunch of write-offs, we can then come up with a plan for the next 12 months.
Okay.
To say, hey, let's do this a little bit different so we can show more of a actual salaried income.
Gotcha.
Because like I said, if I make $1 million, but if I write, you know, $900,000 of that off, it's whatever the IRS is seeing as your income
Gotcha.
is what we're gonna go off of.
Ah.
Yeah.
So, now, I don't know, because I'm not a loan officer, there are such things as a bank statement program.
Yes, sir.
Could self-employed people use that?
Absolutely.
But what if most of their money is in their business account? Would, you know, because when we talk about, you know, jumbo loans, luxury homes, things like that, a lot of people don't have that kind of income personally going through their, or they shouldn't, go through their personal account, but they have a lot of their business accounts that shows that kind of income. Would you be able to use those?
Yeah, we can show that as well, right?
Okay.
It depends on whether or not we're going to use that as assets or as an income-based account.
Okay.
Right, so it depends on the individual on how they're utilizing that account,
Okay.
how long they've had that account, and how we can bring that in and use that to their benefit. When you talk about a bank statement program, it actually works very well for self-employed borrowers that aren't writing themselves checks. So we can go off of like a 12-month bank statement program.
Not 24?
We can do 24 as well,
well,
but we can,
yeah,
all right, well, we can do 12, right? You don't want to show 2 years, so we, you know, the one we have, we can do a 12-month bank statement program.
Will the rates be different?
Rates will absolutely be different.
So will it be better because I can show you more money?
It would be, unfortunately, it'd be a little bit less because in our industry, this is what we call a higher risk loan.
But I'm showing you I make the money.
Absolutely.
So how would I be a high risk if I had the money? So these are a lot of the questions that, you know, in the industry that we do ask. And it's good to have someone that's knowledgeable that can understand and really break it down. So guys, I tell you what, when you're looking into buying a jumbo, anything that's over 726, you know, talk to somebody that really knows. You know, Mr. Google, Mrs. Google, they have some information, but you really want to talk to somebody who's actually been dealing with it and that can actually walk you through, because each scenario is different.
Absolutely.
Each case is a case by case because everybody is different and definitely just unique, because we got to have so many moving factors that we got to put into place, like a puzzle.
Yes.
Well, Nick, I really appreciate that. Tell the people how they can get in contact with you.
Sure. So there's a few ways that you can get in contact with me. One way you can get in contact with me is just getting in contact with this guy right here. and he will let me know, and then he can definitely provide you all of my information. Other ways, you know, a phone number. My phone number is 281-577-7709. My email address is nabert, looks like Hebert, so it'd be NHEBERT @prmg.net. I'd be more than happy to talk with you. One of the things that I really want to try to let you know is that there's no cost obligation to even talk to me. And I'm available every day of the week. It really doesn't matter, right?
That's true.
So, yeah, he can attest to that, right?
I'll be apologizing. Yeah. I am so sorry. He said, no need to be.
Yeah, hey, it's what we do, right? I am here to service you, to help you out. I want to get you the answers to the questions that you have. And the thing is, like I said, there's no cost to it. And we're doing some really amazing things at my company for credit, that when you come to me and we can create these scenarios for you, it doesn't hit your credit like you may think. And so you don't have to worry about that. So if you want the most accurate data for what it's going to be for you to buy a home, the best thing for you to do is to reach out to me, and then we can create this scenario for you and give you accurate numbers versus what a mortgage calculator or Zillow or Google's going to tell you. So yeah, I'd be looking forward to speaking with you and helping you out with whatever your question may be.
Hey, well, I really appreciate it.
Yeah,
Nick,
thank you.
Candace, thank you for your time. Thank you for dropping some nuggets and letting everybody know the difference and just kind of what's going on out here in the market. Well, guys, another great video, another great opportunity for you to reach out and talk to Nick and Candace at any time. And remember, when you have will, you have a way. My name is Will.